The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 30 minutes to go until the start of trading, and you at markets pretty much flat territory. Doesn't mean we didn't have a little action overnight. About 3 in the morning, you're down to 41.10 in the S&Ps. You trade up 30 points from that price level to 41.40. We've backed off a bit. Right now, basically, market's flat across the board. NASDAQ 100, you're positive by 3 points right now, 12,902. You get the Dow barely in the red, 32,888, and the Russell positive by 1. Bitcoin this morning, 21,500, we'll call it. You have Ethereum at 1658. Crude, actually flat to the tick, but how about that acceleration, man, to crude? It didn't stop overnight. You make it to 95.40. Folks, yesterday, in the early morning, we had about a 91 price point, and if you back it up to Monday, you go from 86 to 95. These crude markets, watch out, we're back a bit to 93.82. We'll be talking to our man Teddy Kegstad at 40 past the hour. We'll talk a little bit of Forex. We'll talk a little bit of crude as well. Quite the pop in that crude contract over the last 48 hours. Gold contract down about $3. Gold caught a little bit of a bid yesterday. It's a good day to talk to Teddy because, man, we had some action in the Forex markets yesterday. We had some action in the note and bond market yesterday. Gold contract catching some volatility as well. We bounce off a level of about 1743. You trade up to 1767. We've backed off a bit. 1767. You made it up. I mean, look at the move. You're talking about $25 to the upside. Gold yesterday. 1757 is the price of gold this morning, and you jump 2 notes and bonds ahead of Jackson Hole Friday. We got the 10-year at about 3.08%. The trend. Check this thing out on a daily, man. We are coming down. You trade all the way up to 122 on August 2nd, and it's been lower price and higher yield since then. We're now below where we were in terms of price, so we are above yield from where we were July 21st, and you have a 10-year yield that's basically back to 2 months ago, just like that, approaching 3.1%. Chairman Powell, 10 a.m. Eastern Time on Friday. We still got 49 hours almost, a little bit more than 48 until Chairman Powell makes his speech. That's a lot of time before the chairman makes his speech. And we jump over to the VIX. Elevated levels for the first time in about 2 months as well. From middle of June, you're at 35. You trade down to 20. Couple days of positive action in the VIX. As you take a look at the daily basis on the S&P, you're talking about 3 decent days of lower action. We were just trading at 42.88, let alone the highs we had of 43.27. So you're talking about 200 points lower from where we were about 8 days ago. All right, let's kick it off with some economic news. We'll kick it off with capital goods exceeding the forecasts. Excluding aircraft and defense, core goods rose 0.9% in July. They revised. Yes, after a revised 0.9% gain, durable goods metric flat as defense aircraft plunged 50%. Well, that's going to distort things anytime you have that type of an impact, right? Defense aircraft plunging 50%. Orders placed with U.S. factories for core capital goods rose by more than expected in July. Just amazing how much conflicting data we're getting, where you can almost, there's enough data for everybody in their opinion, at least in the short term. Core capital goods rose 0.4% after an upwardly revised 0.9% advance. The data is not adjusted for inflation. We're talking about month over month. Yeah, and then you're talking about equipment orders core on the top side. And yeah, month over month dipping, but pretty decent numbers, especially when you talk about a beat over there this morning. Tying back to the market, Goldman Sachs, big tech is back in vogue. The average fund's weight in top 10 positions rose to 70%. Now, Apple's been holding up so well, man. And maybe that's part of the reason. If they see a problem here, you want to be in the strongest of equities. And to be in the biggest equity in the world, Apple, that's trading at 167, you were just at 175, almost reaching all-time highs of 182.94. You compare that to even a chart like the NASDAQ 100, right? Quite a difference from 16,700 to 12,900. Let's see how the likes of Microsoft even from 350 down to 275. How Google's fared over that time, 150 down to 114, right? And of course, Meta and some of those equities from 384 to 161, and even a company like Amazon from 188 to 133. Apple much stronger than any of those big stocks so far, and those stocks a lot stronger actually than the NASDAQ itself overall. All right, we jump to, how about Peloton? So they're going to be selling bikes on Amazon. Probably a good bid in the long run, right? Strikes a deal to sell equipment and apparel on Amazon. This thing's jumping around this morning. They struck a partnership with Amazon in a bid to broaden its customer base and sell more products in the U.S. Now, I think they have their numbers tomorrow. So interesting this comes out today. It's going to be the first partnership with another retailer to sell its merchandise. That's the business plan going forward. Until now, the company relied on its website and in physical showrooms. So they're going to begin selling it on the biggest online retailer out there, Amazon. So they're going to, a selection of connected fitness equipment and accessories. It's going to include the original bike, which is $1,445. It's also going to be selling its strength product known as Peloton Guide, which is $295. Excluded from the tie-up are its more expensive Bike Plus and treadmill. I wonder how that breaks down, right? That they're selling the expensive bikes on their own website. I mean, the Peloton bike is not something that you think is like an impulse buy that you're scrolling Amazon, but there is something to be said when you're looking for exercise equipment and you're getting shown every other item out there on Amazon. You're not getting shown a Peloton. It's got to have an impact to some degree. Now, you're up $1 today. So there's a 9% pop for you. You were up $1 more than even we're at right now, $12.25. Large jumps on small numbers can yield large percentages, but I would still be very careful of this equity, folks, because even right now, you jump over to the fundamentals of this company. You're talking about a $4 billion company, and they make exercise equipment, folks, and they're going to just start selling exercise equipment like every other exercise equipment retailer out there on Amazon and the likes. There's a very competitive industry that's always been around, folks, and it seems like that industry cycles through in terms of like Nordic Track, right? To have lasting power to the tune of billions and billions and billions of dollars. Now, they do have recurring revenue. It is a different business plan, but still, you're talking about a company valued at $4 billion. And guess what? When they start selling on Amazon, they're going to lose some of those profits on Amazon. But I imagine to succeed, you probably want to be selling your products on Amazon at this point in time with the amount of business they do. That's a tough chart. We'll see where they go on the open. Good news, but up $1 from basically where we were just trading at on Friday, to put things in context for Peloton shares. All right, jumping around too, let's kick things off how Tesla's doing this morning. Tesla up a bit as the market is flat. We jump over to Twitter. Twitter trading lower yesterday. It looks like it's going to be flat on the open as well. We jump around to some of the banks as we come into this first break. Pretty muted action even with higher yields. Banks pulling back 34.34 on the price of Bank of America. JP Morgan down a little bit. I mean, just look at the moves over the last week, man. JP Morgan down from 123 to 115 right now. S&P's flat at 41.30. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have all the markets sneaking into the red right now. S&P's negative by just 1 point. We got the NASDAQ 100 negative by 6 and the Dow negative by 33. Let's jump over to our man, Kevin Hincks. Folks, every trading day, noon Eastern time, Kevin Hincks, Tom White on the TD Ameritrade Network, Fast Market. They break down the day's market action, folks. They walk you through hypothetical trade setups. They're usually talking about 3 different equities, 3 different trades, a tremendous way to learn options if you're not in that market. All of them defined risk. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, the last day where we'll have to wait for the news flow to begin out of Jackson Hole leading up to Jerome Powell's speech on Friday. We did get some data out today that was, not really surprising. The losing streak in housing continues with some weak mortgage apps data. Durable goods orders showing the drain of transportation on the overall economy. They were looking for a number much better than expected at 0.5 after 2.2% a month ago. Tommy, it comes in unchanged, but ex-transportation up 0.3, core capital goods up 0.4. So, without transportation, it shows you in terms of durable goods how the overall drain on the U.S. economy. So a little bit of a soft number in terms of the headline durable goods, more weakness. The losing streak in housing continues. We'll get pending home sales coming up here in another 40 minutes or so, Tommy. But still, we wait for Friday's inflation data, and we wait for Jerome Powell to speak, Tommy.
I wanted to jump over to yields, Kevin, on the 10-year. Pretty interesting move as we come into a big Fed event. Many times we've talked about before, man, whether it's actually literally the day of a Fed meeting that the market finally pivots because it's gotten ahead of whatever the news is coming down the line. We're back right now on the 10-year, negative another 9 ticks. I think we got the yield pushing, almost 3.09%, the yield on the 10-year. interesting levels. We're back almost a couple months. Do you think this is getting ahead of potentially the chairman being a little bit more hawkish in Friday's testimony? Not testimony, excuse me, but Jackson Hole in his speech out there? Or what's your take on that action? Pretty decisive, 3.1% coming at us, it feels like.
Look at the move in the 10-year yield. Look at the move in the U.S. dollar. That shows that we are the most hawkish country in the major group. China, Europe, Japan, we're the most hawkish of that group. Or we have, even though Europe has tried to join that hawkish camp, let's face it, China's lowering rates. Japan has committed to being dovish, but Europe has got bigger inflation problems even than we do. They're talking about their inflation topping out at 18%. Jerome Powell may have the best story of all those economies when he talks on Friday, because he's got inflation, at least for now, heading in that right direction. Now, crude oil is going to be problematic in the future. Energy is part of that discussion. So we're going to see what Jerome Powell says. Remember, of the four major economies that I just mentioned, he has the best story so far. He moved early. He moved swiftly. So it's going to be interesting. Remember, he's got a great propensity to deliver news to the markets that they like, that they accept favorably. So we'll see if he continues to do that. He'll probably stay on point. But remember, the Fed minutes showed some two-way discussion in terms of being hawkish. So we'll see if that comes out in his statements, Tommy.
It's pretty cool in terms of the volatility right now as a trader, and you have the movement in yields going on, man. We were at 3.5 many times, Kevin. You said, maybe 3% is a number it'll be comfortable with for a while. Nice round number. It's got to chop around a bit. We go to 3.5. We almost make it back to 2.5. We're coming into the meeting at 3.1. It just speaks to, I think, how much uncertainty, even as you go forward, and maybe we get a little bit of clarity on Friday. Jumping to Peloton real quick. So they have their numbers later in the week, but they're out this morning. Yeah. They got to deal with Amazon. They're going to be selling their bikes and some clothing on Amazon. They're up about $1, but this stock has gotten hammered, man. I'm not sure if you'd heard that news out this morning, Kevin.
Yeah, of course.
And what do you think of the news on Peloton this morning?
By the way, Peloton has earnings tomorrow morning before the open. So a little early announcement from Peloton that they're partnering with Amazon to sell their products through Amazon, not only their bikes and their treadmills, but their accessories and their apparel as well through Amazon. Now, the first question that a lot of people are going to ask is, who's going to assemble this bike? Is it coming in a big box? Is Amazon delivering? Well, it looks like you're going to have your choice for them to do it. I can't imagine a situation, Tommy, where that box is going to be delivered. You have to assemble this yourself. But at least the ordering mechanism and how you go through that is going to be able to be on Amazon. It's good news for Peloton. It makes them, access to more people, more potential customers. Tommy, it's nothing but good news. Is it a game changer? We'll find out.
Yeah, that's for sure, right? And it is interesting in terms of they need a new business plan. We know that one from where they were, the mistakes that they had with their last CEO, the founder. And so maybe this is the turnaround. Seems like you should be selling your products on Amazon, but obviously the question you asked, right? What kind of deal? What kind of margins? Some of my friends a little skeptical, Kevin, this morning talking about Amazon, maybe not innovation, right? But that's not really where they're at this point, as they sell an exercise bike. So maybe that's the path to a profitable company in the future. With that in mind, Kevin, we're about 5 minutes away from the open. What are you guys talking about on noon at Fast Market coming up today?
Today's real easy, Tommy. We got a big day of earnings. NVIDIA, Salesforce, and Snowflake today.
I love it. Easy enough. NVIDIA, Salesforce, Snowflake, 3 great stocks, folks. They'll be talking about it at 12 noon Eastern time. Check it out every trading day. We appreciate it as always, Kevin. We'll be watching at 12 today, and we'll talk to you tomorrow, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in every trading day. Outstanding show. They're going to set up 3 trades on 3 different stocks. And, yeah, you talk about it, man. Some 3 big stocks. NVIDIA, I was talking about this one, man. The multiples this thing got at 346, out of whack, man. Many analysts Hindsight always 2020, right? But I started hearing those multiples on companies, especially like some of the chip stocks, and how many years or how many decades or how many 100 years they would have to make money in terms of to get your investment back at the PEs they were trading at. NVIDIA almost cut in half from where it was on the highs last year. They're out with their numbers. Salesforce, man. This is a strong company in the long run, I think, folks. Quite the pullback, though. You check out Salesforce. I mean, so much for Fibonacci numbers. You give back the 786, I say so much as in it blows through every single level, almost gives back the 100%. They don't always work, folks. At least you have some nice levels where you know if you're right or wrong. Blows through everything. You're sitting at 176. You're prior to pre-COVID levels for Salesforce. And then Snowflake. Talk about a pullback as well from 400 down to 153, man. Some of those growth stocks, chip stocks, right? Cloud stocks, a lot of multiples in some of those equities. And, man, those are the ones that have been punished. All right, folks, we got about 3.5 minutes to go. We're going to take a quick break. We got the S&Ps right now negative by 2. We got the NASDAQ negative by 12. You heard it, Kevin Hincks. He's a little bullish on that Peloton. We're going to see how it opens. As he said, it's up $1.20. That's more than 10%. Peloton accelerating, coming into the open a little bit. Stay tuned, folks. We'll be coming back for the open in 3 minutes.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risked partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the markets open. S&P's negative by 2. We get the NASDAQ 100 negative by 6. Dow negative by 46 right now. We jump around to some of those equities that are moving this morning. We started off with Peloton. See how they open? They catch a lift even from there. Not bad. You're up about 12% this morning for Peloton. Nordstrom out with their numbers last night. Tough numbers. You continue to drop. How about that, man? Down 16%. Now, to surmise it real quick in terms of Nordstrom's, they actually reported better than expected profit and revenue for the quarter they were reporting for. But if you want a quick lesson, folks, it's not about what you did yesterday. It's about what are you doing going forward. Going forward, they cut the full year outlook, saying foot traffic had diminished at the end of its most recent quarter. And I think they may have used some words in there, like dramatically or something like that. And it was aggressively working to cut inventory levels. Common theme lately in some of those retailers. Brinker International, Chili's, Maggiano's, the restaurants, they are lower. Let's see how they open. They were lower by, about 9% as they miss on earnings with impacted by higher costs, and they lowered the outlook as well. With some negative action. Toll was slightly in the negative. They're down about 2.7% on their numbers. How about Bed Bath & Beyond? So they shore up some of their credit, and they catch a 25% pop, and you're still down dramatically, obviously, from where you were last week at $11. What did Cohen get out at? 25 and change or something like that? Quite a story, to say the least. Urban Outfitters, speaking of retail, lower on their numbers. They catch a bid, though, up 1.1%. Different action than Nordstrom's. Nordstrom's, man. Macy's, they give back some of the gain that they started with yesterday, down about 1.8% for Macy's shares. And, Advanced Auto Part, this company, flat after being a little lower. I was going to say, quite the run. Man, you were nearing, basically, we started the year off. This thing's been so strong. Take a look. Look at that. Whew. From $35 in 2018 to $167 selling auto parts. Not bad. Intuit was higher as well. They raised their dividend. The tax business, not bad, down from $716 to $483, but they catch a bid by 7.5% today for Intuit. Let's see how some of the companies that Kevin's going to be talking about at noon are trading, coming ahead of their earnings. We jump over to NVIDIA, down about 0.5%. So NVIDIA's out with their numbers. Let's see, today after the bell, about a $10 move priced in on either direction for their numbers. We jump over to Salesforce, a little bit more volatile. No, not really, I guess. Well, $14 move, $13.40 on $176 stock for Salesforce. And Snowflake, there's a move for you, about 11 or 12% move. And this is what we say, folks. If you're not even trading options, trading equities, understanding the implied moves with volatility, very important. If you're going to hold an equity through earnings, if you're going to purchase an equity before earnings, just being aware of the type of volatility that the market is pricing in either direction on that event. Some stocks much more volatile than others. Snowflake, you're talking about a 12% move priced into their numbers after the bell today as well. All right, let's jump around to some of the other articles I had pulled up here. You talk about inflation, man. 20 million U.S. homes are behind on energy bills. Surging electricity prices spur worst ever crisis in late utility payments. That's 1 out of 5 homes, folks, are behind on their energy bills. Okay? And they just talk about some of the numbers in here that you could go through it. Total U.S. overdue utility balances? How about $16 billion this month? You were at $8 billion coming into COVID, basically. Well, that's not fair, because December, you were. Yes, you were. You've been up at these levels, though, since March, when oil really started to spike. And Europe's going to be in big trouble, to say the least. Utilities, gasoline, and grocery prices rising like never before. Inflation, frustration, power, fuel, and food. Okay? Checking out these numbers, folks, I've seen this article written before, and they probably just updated it with this updated chart. Electricity, gasoline, and food, if you add them all up, there's never been the combo. The last time all three were at 10% plus at the same time, you're talking about like 1980, folks, on that lineup. So keep that in mind as we go ahead of Friday, man, because the S&P, not too bad, trading at 41.22 right now, considering we're at 8.5%. And there's no reason to think the Chapman might not just bring it with 50 or 75 basis points and continue the pressure until they're sure that inflation has subsided. We're kind of crushing it past the point, right? Maybe overdoing it a little bit, just like they did when they allowed inflation to roar out of control. If they're going to do it one way, they probably do it the other way, just to be sure, right? Seems but natural that that would be the attitude that they went with. And yeah, speaking of the same, common theme, electric bills double for U.S. families with fuel costs surging. Folks, people just don't have that type of money when you add in everything else going on, okay? New York to California, rate shock is their latest utility bills as the global energy crisis drives up prices for fossil fuels. The increase is becoming a problem. They list it. How about going from $250 to $508? Right? I mean, huge. I mean, my power bill out here, folks, is almost $500 right now. And that's nothing crazy. We don't have a pool running anything like that. We got air conditioning. Even the AC, we keep it at a very reasonable level. I think we're pushing about 76 during the day, maybe 73 or 74 at night. Pretty cool, but it's a decent big house. Almost $500. That includes water, but water's not a big part of that. A lot of that is just energy. And then they speak to the same deal. 21 million customers behind on the utility bills. Talk about doubling, right? Pretty wild. We jump from there to mortgage numbers, okay? We're going to talk to our man Teddy Kegstad. We'll talk a little bit of yield when we talk to him next segment. First-time buyers show more demand as mortgages, even as interest rates rise. 5.65%. Rates are on the rise, man. They have been on the rise. You jump over, now, of course, the curve getting a lot of attention, okay, but everything somewhat related to the 10-year. You take a look at the 10-year, rates have been rising almost the entire month of August, folks. And you jump to it 5.65 from 5.45. Now, what's interesting here is conventional applications down 2%. Government applications actually increasing 4%. Okay, government applications for loans, usually a sign of more first-time homebuyer activity where you may qualify for a government loan. Mortgage applications fell 1% last week when you look at that number. Volume 21% lower than the same week a year ago. A jump in demand for loans offering lower down payments, though. So it's going to be interesting, right? Maybe as this market softens, as the overall real estate market softens, people who had been out of the market, who are paying rent, what are they going to do? They're going to say, you know what, man? I'm paying $2,000 a month in rent anyway. That's lighting $24,000 a year on fire because I got no equity whatsoever that I'm getting out of that 12 payments of $2,000 a month. So maybe I bite the bullet. Maybe I get a loan at 5.65% because maybe I have a little bit more bargaining power coming into bidding for a property, right? And what's the worst case scenario? You can always refinance that rate down if things come down in a year or two. So that's going to be in effect. And you're seeing it with the 4% rise in government applications, even as you have rates rising from 5.65. I mean, you heard it all the time, right? Folks that were first-time home buyers in the market, maybe for a property over the last 2-3 years, and you're coming to bid against investors with all cash bids above market anyway, very difficult. So a different market for them, and maybe you're seeing them come back into that market. All right, folks, stay tuned. We'll take a quick break. We'll be coming back with our man Teddy Kegstad. We'll talk a little bit of Forex. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps literally flat to the tick as we speak, trading at 4130 right now. Let's jump over to our man, Teddy Kegstad. Folks, we talk to Teddy every Wednesday at 40 past the hour. Mark it down on your calendar. If you'd like to check out Teddy's work, folks, head on over to the front page of TFNN. You can try out the Tiger Forex report right under the newsletters tab. 30-day money-back guarantee. If you're not happy with that service, you're not using it for any reason, nothing to risk. Teddy Kegstad, we have the euro back under parity, and we got some action in yields ahead of Jackson Hole. Good morning.
Yeah, good morning, Tommy. If everyone that's been reading the Tiger Forex report must be happy because we've been nailing it the past couple of weeks with this nice bounce in the dollar and the sell-off in the interest rate market.
Listen, you've had some great calls, man. It's pretty awesome. Where do you want to kick things off? I know they're all kind of interrelated, as you've explained to us many times before. But where do you want to start things off as we go around here?
Oh, I think the dollar is definitely the big topic, and the reality is now with the 30-year and the 10-year. I mean, we called it already a couple of weeks ago when we had that short-term top at the point. At that time, we were calling it for that when the correction was coming to an end, and now we know that high is in. That lower move high is solid, and we're looking to make lower move lows no matter what, especially with the Fed speak. I mean, the only thing that would change at my perspective, I mean, everyone knows I'm a dollar bull, an oil bull, and an interest rate bear as far as pricing. And unless the people at Jackson Hole can convince our Fed to become dovish or at least no longer so hawkish, I can't see how we're not going to see going into the end of the third quarter, see a major U.S. dollar rally ahead of us.
That's pretty cool when you're sitting at 109, as in, we got a bull potentially off of a bull, accelerating things, and the euro sitting, under parity, and that yield approaching 3.1%. I was talking to Kevin Hincks about this morning. Pretty interesting that we're getting such a move ahead of such a Fed event when we've seen that the market likes to kind of get ahead of the move that the market's pricing in. We have some Fed speak on Friday, of course, with the chairman, and we have rates that we haven't seen in almost 2 months, which is pretty interesting. And the market sitting pretty healthy levels when you think about where the market was as the last time we kind of blew through 3.1% at those lofty levels.
Right. And crude oil is going to be one of the little dominoes that really kicks things into gear, because you got to realize when rates were when we were in the corrective mode, okay, interest rate pricing was going up. So that put pressure on the dollar. Well, pressure on the dollar also puts pressure on crude, because crude is basically valued in dollars through most of the world, and it's also valued in euros. So the euro is not strong and the dollar was coming back. So that means crude came back in pricing. But now what's happening? The dollar is escalating. The dollar is getting much stronger against the euro, which makes the euro weak against oil, which means that oil is now going up in price just because of currency valuations. It's just the reality is most people buy oil in either euro dollars or in US dollars. And because of that correlation right now, that should probably give a lift to the oil market. And if it does, if we start to see the 10-year and the 30-year really become unhinged over the next couple of weeks and start to pressure lows, and the US dollar starts to make highs, like let's say the US dollar goes up another 5% over the next 2 weeks, and the bond interest rates go down another about, let's just say 5-6 basis handles in both the 10-year and the 30-year, which is very reasonable. What would that do to oil? That could shoot oil back up to over $100, or even have it going on towards 110, especially as you hit into the September expirations, and I would be remember we were talking about a bear trap in oil and also bull traps in the interest rate quadrants, a couple weeks ago. Well, we were right on that. Now, I'm not saying that means we're going to be right now, but the momentum of this thought process is really getting accelerated right now.
That was a great breakdown. Folks, you heard that breakdown. That's the reason why you should go check out the Tiger Forex report, because Teddy, you've walked us through some of those, relationships in the years past, and it's just such a great education how they're all related. And right now it is working out. And like you say, it's not always the case, but yes. And I love how from a rational, reasonable standpoint, it all makes sense too. Well, you're dealing with demand of different instruments that are all interrelated in a big way. And yeah, crude, huge move over the last couple of days to $95. And folks, I have it up on my chart. And I had even said to some of my subscribers, Teddy, the move has been so large from 123, and this is just the move from June, not even from the first spike high. It's just been such a big pullback. You even get a 382 bounce of Fibonacci, that's to $100, and that's just a 382 bounce, let alone even a 618, which sometimes is not a complete reversal of trend. That's up to 109.16. I have my chart, almost 110. So 100, 110. We're at 95 today. We're at 85 only a couple days ago. How about the yen, Teddy, and how that relates to the conversation, of course, with the yen? Some decent action, 137 right now, chopping around for a couple days at this level. But what's your take here on the yen as it's related to everything?
It's in a creeper rally mode just because of the levels that it's at, but I'm still a buy break scenario, and I think we're going to see the yen pop 140 probably over the next couple of weeks, especially if we start to get this accelerated move. If we really see, let's say we see the bonds in the 10-year tank 2-3 basis handles going into Friday, that would probably take the euro down another 2 basis handles, hit the pound, and I would say that most likely you'll see the US dollar Swiss pushing towards getting really close to parity again. And if that happens, I can't see how the US dollar yen cannot go up and start pressuring highs. And if we get a rally in oil over the next few days as well, let's say we start pushing $100, I see the US dollar yen definitely trying to make new highs going into next week.
Yeah, it's pretty wild. And just back to the crude even, you're talking about that bounce. Amazing that it actually bounces from where it was in October of last year, almost right to within about 30 cents on my chart, and that's rolling futures. But yeah, seems like risk reward wise, when you're back to levels of last October in crude, down from 120 and change, yeah, not outlandish.
And can I add one more point too?
Please.
I'm an S&P guy by nature, and I spent a lot of time in there. The way the S&Ps have sold off going into yesterday's close and the way they're looking, if what we're talking about is really going on, that means that S&Ps might start to really sell off also. I got a target down at 40.6275, which, that's not that hard to hit over the next week or so. And if that happens, that locks in with what we're talking about now. So the S&Ps could be the big confirmation of this extended wave where you're going to see a big shift. Big money is going to start going bid in the the U.S. dollar. They're going to go offer in the interest rate quadrant. Now we are coming towards month end in a holiday market, so we think we could see a little stabilization. Be careful next, because end of the month window dressing, you're going to see a lot of money going into bond funds and stuff like that. But I don't know. I really think that the overall momentum is what we've been talking about today. So
yeah, it's a tough case to argue against, man, with the moves that we're getting. And you make a great point. We're coming to the long weekend. We come back, and from the Tuesday we come back, it's 2 weeks from when that Fed meeting actually begins. So we go right into it yet again.
Right.
If everything is kind of so related, you know what? Can you stay with us, Teddy, for the last few minutes? Because I wanted to get. I'll give you. I wanted to get. So with that in mind, right? Maybe as traders. And we'll tease it, what I want to talk about with Teddy as we come back, folks, is, what data might really decide this, if any, because if it's potentially about where the rates go, and we have Chairman Powell, are we going to be watching whether it's the jobs number, the CPI, how important is that for the next meeting? We'll leave it at that. We'll be right back with Teddy, folks. Stay tuned.
Sounds good.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P's basically flat right now at 41.31. We jump over to the dollar index, up about 38 basis points, 109.01 on the dollar index. So to phrase that question a little bit better, Teddy, obviously the CPI is going to matter, the jobs are going to matter. Mm-hmm. Is that where you might see a change of trend if you're looking for one, or do you think at least we're going a couple months down the line with the path that we're on, or are you looking for the numbers that come out in September with a keen eye ahead of where that shapes maybe the Fed and their path at their September meeting?
Okay, well, this is a very good question. As far as these are the numbers we need to look at, but it's not just ours, it's globally. You got to remember we have an election going on, and because of the softness in oil and interest rates over the past few months, the correction of those markets, I think, are now done. That's caused a softening with the CPI, the PPI, and things like that. Unemployment is the biggest one we need to watch in our country, but the way we compute it isn't the same as many other countries. You got to remember that there's a lot of people that are out of work right now that don't count for unemployment anymore, and they're not going into jobs because of restrictions, so there's dynamics that they don't have in other countries that we have. And I think because of the softness in oil we've had over the past couple of months, it's going to be reflective in the data. They're not going to be CPI and PPI are not going to be going up as much as they have been, but this is short-lived. If I'm right about the scenario we talked about before the break and oil starts going up, rates start going up, and also we start to see especially a hit in the stock market, well, guess what's going to happen there? CPI is going up, PPI is going up, and unemployment will start to go up. And that's going to be a very big issue for our economy. But what does that mean globally with our currency? You got to look at Europe. Their numbers are the ones that matter the most. If you see a continuing of higher unemployment, higher CPI, higher PPI in the UK, and especially in the EU, look at Germany especially. That's the number one marker right now. If they keep trending the way they're going, and I've been talking about this for months, that's not good. That's horrible for the euro. It's horrible for European exports will be cheap, but who's going to buy them? And then also because first of all, they have an embargo against most of their customers, So yeah, it's going to be definitely something to watch.
I'm glad I brought you back, man. That was an awesome 2 minutes. Folks, go back and listen to the interview right at our YouTube channel. Teddy, thank you so much, man, and we'll talk to you next Wednesday.
Sounds good, Tommy. Take care.
Take care. Check out that Tiger Forex report, folks. Stay tuned. Basil Chapman.